Happy Wednesday, everyone, and welcome to episode number 2 of Real Estate Real Talk. I am your host, Donna Kelly, and we are live talking about the real estate market with zero fluff and total transparency. I want to welcome today Jason Tedford from New American Funding. Isn't that funny? Jason, how are you?
Very good. How are you, Donna?
Good. Jason's actually here today to answer all your mortgage related questions. But before we start, I just want Jason to tell us a little bit about himself, how long he's been in the industry, and what he likes about his job. I mean, it sounds kind of boring. Sorry.
Thanks, Donna. Yeah, I've been in the industry now just about 30 years. Have literally helped thousands of buyers over the years. And honestly, that's why I still do this, is because there's no better feeling, no better satisfaction than helping somebody achieve their dream of home ownership. And you know what ends up happening now, being in the industry this long, I'm actually helping my clients' kids acquire their first home, right? So it's like
Really?
generational, which is awesome. Yeah, it's a great feeling, and that's why I'll probably continue to do this until I no longer work. Um, you know, I'm a Capital District native. I've lived here my entire life. I know the area very well. And not only do I work with first-time home buyers, but I do work with repeat buyers, seasoned investors that are looking to buy investment properties, people looking to buy out-of-state second homes, things of that nature. Um, I love what I do, and this is what I'll be doing until I no longer work. I see this another 20 years at least.
Excellent. Well, Jason and I have been doing different things. We've done home shows and a few other events. And one of the things I noticed about Jason is he likes to educate his clients, which from my perspective is really good because that means I don't have to do it. I'm not an expert on mortgages or loan costs or any of that. And Jason actually takes the time to explain it to all his people. So I appreciate that a lot.
Yeah, my
Um,
pleasure.
so I had two questions that were DM'd to me this week. Um, so if you're ready, I'll let you know what they did. They DM'd me because they wanted to be anonymous. So I'm not going to tell anybody's names.
Yeah,
Uh,
no, fire away, Donna.
okay. So this person's worried they don't have 20% down payment to buy a house today. Um, and they've heard that they can do conventional at a smaller down payment, but they're asking if they do that, will their interest rate go up or will it stay the same? In other words, the amount of the down payment you have uh, for your house, does that change your interest rate?
Yeah, great question. There are a lot of programs out there designed for first-time home buyers that have limited down payment funds to work with.
Hmm.
Conventional specifically, Fannie Mae and Freddie Mac each have their own version for a single family home as little as 3% down. It's called Home Possible and Home Ready. And there
Oh,
are income limit restrictions for the program. So
okay.
you have to be at or below 80% of the area median income. Um, but as long as you're within that income limit, there's no add-on to the interest rate. So whether you're putting 3% down or 20% down, you're not going to get hit with a price adjustment. So
Okay.
that's a great question. That's a great program. But even if you're not income eligible for that, Fannie and Freddie both have as little as 3% down without the income limit restriction. There will be a little bump to the rate, but not radical. You might be seeing maybe a 1/4% higher on the rate, so it's not like a significant hit. And that's going to be offset by the fact that you're keeping an extra 17% in your pocket, right? So great question. And then, of course, there are FHA and other government loan programs where you can put down, for example, with FHA as little as 3.5%, USDA, no down payment, and VA, no down payment. So if you're eligible, yeah.
So I a lot of sellers don't know this. So because you brought this up and opened the door,
Hmm.
I just want to ask this. I don't think buyers know this either. That, and correct me if I'm wrong, but if I apply for an FHA loan or USD loan, my interest rate is lower than a conventional. Is that right? Or is that wrong
It,
when I say that?
in some cases, yes. Yeah, because conventional loans have something called loan level pricing adjustments, and one of the factors that they look at is credit score, and another factor is loan to value, right? So the amount down. Well, with the government loan programs, they don't have the same loan level pricing adjustments, so the rate doesn't get offset as much. So yes, it is possible to get a FHA loan with potentially an even lower rate than a conventional loan. Every situation can be different, right? So it's not like a cookie cutter approach answer, but I would say if anybody has specific questions, they can always private message me and we can kind of go through it for their particular situation, crunch numbers. But yes, a lot of times government loans can be priced more attractively than a conventional loan.
Perfect. And just so everybody knows, pinned to this event, my real talk. I don't know what I'm saying anymore. Real estate, real talk is Jason's contact information. Plus, there's a mortgage calculator in there, right, Jason?
Yeah, absolutely.
Yep.
A whole bunch of different calculators that you can go through.
Okay, yep. And that's pinned right to this. So look for that under the video. Um, okay, so I have another one that kind of goes with credit scores. And they're
Sure.
asking, is there a baseline score that they would need before they even started talking to you? Like
Okay.
when when can they look for a loan? What
Yeah,
if they're,
yeah, that's a great question. And it's kind of there's a few different answers to it, but basically it's the whole picture, right? When we're looking at it, when we're looking at a loan and we're underwriting a loan, we're looking at the whole picture, right? Not just credit score. So I think a lot of times people think that because maybe they've got some damaged credit, maybe it's not picture perfect, they just give up and assume that they don't have any options. Well, we're looking at the whole picture, right? So we're looking at compensating factors. How long have they been on their job, right? Somebody who's been on their job a year versus somebody who's been on their job 10 years, that's a compensating factor. How much do they have to work with for down payment? Somebody maybe only has 3.5% down, somebody else has 10% or more to put down. That's a compensating factor. Um, Rent history. How long have they been renting, right? So maybe they've been renting for 10 years and they could document their rent history with canceled checks, right? As opposed to somebody who's living at home still, with parents that has no housing experience history, right? So these are all compensating factors that will ultimately determine, the magic number for a credit score, right? But kind of a rule of thumb, I guess, if your credit score is, let's say, 680 or higher, right? That's kind of the ideal scenario for a conventional loan, but it doesn't mean that it has to be there. I've done conventional loans with a 620 credit score.
Mhm.
Okay.
Because you look at all these
FHA,
other factors, right? Is that what you're saying?
exactly, yeah. And FHA, this is the big one to make note of. We are a direct FHA lender, seller, servicer, which means unlike a local credit union or a local bank that puts additional overlays on their underwriting process. In other words, they have a risk tolerance and they don't want to go above that risk tolerance. So, for example, they may say, okay, FHA says they will allow down to a 580 credit score with as little as 3.5% down, but we don't want to take on that potential risk. So, we're going to set the requirement at a minimum credit score of 640. Okay.
Okay.
We don't have those overlays. We are a direct FHA lender. So with as little as 3.5% down, as long as you have a credit score of 580 or higher, you're potentially eligible to qualify. Okay.
Okay.
That's a huge difference. Now, FHA also says if you've got 10% down or more, we can actually go down to a 500 credit score. Okay. Again,
Okay.
looking at the whole picture. Okay. So
Okay.
if somebody's been on the job, maybe they had a life event that happened that caused them to get into some trouble and credit wise, and they're trying to rebuild. It's just taking time. So are we going to penalize somebody with a 550 credit score that has 10% to put down, that has job stability, that has rental history? No, we're going to work with them, right? So it's common sense underwriting. It's a human approach. They're looking at the whole picture.
I like that. I
Yeah.
think, myself included, I always thought that was the first and almost the only thing you looked at when you looked at lending money to a home buyer. So it's good to know that if, maybe they did get into a little financial trouble, but they've worked at the same job, for 8 years or 10 years, and that carries weight. Or they've been a renter, and they've always paid their rent on time. They've never been late. Now, what if they did this? And it may not make any difference to you because it's not financial. But let's say they did pay their rent on time and their landlord wrote you a letter to say, that they took care of the place or recommended them or something. Would that carry
Yes.
any weight?
So as long as they have a documented payment history, it's like maybe they pay by debit card or whatever. We could get 12 months bank statements even, right, to verify their rent. Or if they rent from a management company, right, not like a private landlord, but a management company, we can do a verification of rent from the management company to
Okay.
document their on-time payment history. So I even have people that pay by Venmo, and
Wow.
Venmo, we can get 12 months bank statements because that Venmo is connected to their checking or savings account. We can show a consistent pattern every month. We can piece together a 12-month paper trail of on-time rent history.
Oh, wonderful. So really, you just
Yeah.
need their bank statement, right? Is that what
Yeah.
you're saying?
Yeah. Yeah. Exactly. That's correct.
Okay.
And so, just to sum that whole thing up, again, it's really the whole picture, right? It's not just credit score. It's not just how much income they make. I mean, all of it ties together, right?
Mm-hmm. Yeah, I like that. We have one more question.
Sure.
Um, and this actually will be something that we're going to talk about in the future. But if we have a few minutes left, maybe you could just broach it a little bit. Um, so they're asking for buyers who are competing against all cash offers. Is there any way to structure a pre-approval so the seller feels as confident versus a cash option? I have seen this year where sellers have um, taken a conventional loan over cash, amazingly enough. I don't know why, but okay. But I mean, I'm just going to jump ahead on this question before you answer it.
Sure.
Would being pre-qualified versus pre-approved make it more comfortable for the seller? I mean, what's the weight of that?
Well, yeah, for sure. So we generally like to pre-approve our clients. So what's the difference? Well, when you take an application for a consumer and they fill out the application, but they don't actually send in any of their documentation, right? So we can't verify anything that they're telling us. We're taking them at their word. We run it through automated underwriting. We run their credit. We do a soft credit pull initially, not a hard pull, which is important to know because hard pulls can negatively impact a score a little. So the soft credit pull avoids that risk, but it gives us a baseline of what we're working off of, right?
Mhm.
So when we run it through the system and we say, okay, well, assuming the income is accurate, assuming the assets are accurate, assuming the job history and everything else is accurate, yes, you pre-qualify to purchase up to X. We could send a letter out, a pre-qualification letter. However, if we want to take it a step further and we verify all of the documentation, right? So we know pay stubs check out, W-2s check out, assets, bank statements check out. Now we can issue a pre-approval letter, which is a step further as far as the quality of the pre-approval goes, right? So somebody who's pre-qualified versus somebody who's pre-approved, it's going to be a stronger offer. Okay. To go back to what you're saying about the contingency of having to sell, competing against cash offers. Okay.
Mm-hmm.
If I'm a buyer and I own a home already, and the only way I'm going to be eligible to qualify, because I can't afford to carry my existing mortgage plus the new mortgage, or I don't have the funds to work with to come up with, because all my equity, all my funds that I'm going to be working with are tied up in the equity in my existing home. Until I sell that home, I don't have an option to put an offer in, right? Unless I do it contingent. Well, NAF has come out with a program called NAF Cash, which basically means we underwrite your file in full up front first before you start looking at houses, right? You do the application, we collect all your documentation, we have our NAF Cash team review your file, we issue an approval letter. We will actually buy the house that you're looking to purchase with our money. We'll buy it, we'll close in our name. Okay. The same day that we close, we will rent the house back to you. You can move in that day. Okay.
Okay.
That gives you time to get your existing home on the market to sell, stage it, list it, sell it. But meanwhile, you're already living in the subject property that you wanted. Then, once you sell your existing home, immediately we will have a contract drawn up to sell the home that we purchased on your behalf back to you. Okay.
Okay.
So by doing that, you're using our money to become a cash buyer up front, eliminating the contingency, and then selling the home and acquiring the home, the new home from us after. And that whole process typically takes about 60 to 90 days from the time, you move into the time. So again, I can get into a lot more detail, and in one of our future episodes here, Donna, I'll have a guest speaker from our NAF Cash team to kind of get into the nuts and bolts a little bit more depth.
Oh, that's wonderful. Because I'm curious, and I'll just add this, and I know it's future. When you rent it back to the client, I'm just wondering what that rent looks like.
Well, it's fair rental value. We actually have a rental schedule.
Okay.
And what we do is, you're not physically making money. We don't want to be landlords. That's the last thing we're doing, right? This is a courtesy offer to help buyers become cash buyers, right? But we don't want to retain the mortgage or retain that obligation for any length of time. So that's why we have a 60 to 90 day window to buy the house back from us, right?
Okay.
But
Yeah.
during that time that they are renting it, they're not physically making a rent payment. It's being added to the sale back price.
Oh,
Okay.
okay.
So
That's
they're
what I was
not,
curious
they don't
about.
have, the carrying costs of their existing mortgage plus rent.
Okay.
They would have just their
It's just
existing
added to
mortgage.
their new mortgage, right?
Exactly.
Right.
Yeah.
And
So if it
if you,
takes 2 months and
it's
and it's
nothing.
3,000 a month in rent, that 6,000 would be added to the total purchase price,
Yeah.
for
Okay.
an example.
Yeah, that makes total sense. I like that. I'll look forward to that episode.
Yeah,
Um,
absolutely.
so we were out of time. Amazingly enough, that went by so quick. And I really enjoyed the way you answered these questions. I actually learned a lot myself. Everybody, remember the link is below this video. You can reach out to Jason with any questions. And next week, Jason's going to have a fun time interviewing me as a real estate agent. I hope he has some good questions. And I want to thank everyone for coming. Jason, do you have any last words?
No, if anybody needs to get a hold of me, like Donna said, contact info is below. 518-669-9780. I'm always available. Call me, text me, email me. Be more than happy to speak with you.
Perfect. Thank you.
Thank you.
I can't actually get out of here. My I wonder if anybody ever watches this till the end because then they get all the bloopers.
Yeah, we'll
Donna
have a
Kelly
blooper
can't find
reel.
her mouse. Seriously, though. Oh, there it is. Okay, Jason, it was lovely. I look forward to
Thank you,
seeing you
Donna.
next. All right, bye.
Bye now.